Good morning, esteemed guests, fellow innovators. My name is Oluwatoyin Fakorede. I head compliance at Raenest. Um, I'm honored to be moderating this panel today, where we discuss future finance, um, uh, innovation in fintech landscape in Africa, and also we'll be diving into different topics ranging from um, transformative innovation in financial services, digital assets, and insurance, and also health tech. It's really a pleasure to have the moderators, the panelists on the call. I would give them the opportunity to introduce themselves, reintroduce themselves again, their companies and what they represent, and then we kickstart the discussion. Thank you.
Okay, I'm just gonna kick off. Thanks, Tony. Hi everyone, my name is Maxwell. I am the CEO and co-founder of Waza. We're a B2B payments platform. We're providing FX liquidity and multi-currency accounts to emerging market businesses so they can pay their vendors and suppliers globally.
Hello everyone. Hope everyone is having a good morning. My name is Mumbi. I'm the general manager at Tala. Tala is a personal finance ecosystem operating across 3 emerging market continents. So we have a presence in Kenya, the Philippines, and Mexico. Really started focusing on how to democratize access to credit, but have since evolved to really think about personal finance and how we can essentially democratize the entire ecosystem of financial services. So we currently serve about 10 million customers, disbursed a little over $5 billion. Over the last 10 years, and looking forward to this conversation.
Good morning. My name is Ted Pantone. I'm the CEO, co-founder of Turaco. Turaco is an insurance technology company operating in Kenya, Uganda, Nigeria, and Ghana. We have 3.5 million customers across those markets. We sell them medical insurance and life insurance. Typical cost is about $1 a month per user. Very happy to be here and explore this topic. Thanks.
Good morning, everyone. I'm Samuel Okwuada, CEO, co-founder, Remedial Health. Remedial Health is a health tech platform providing services such as inventory management, financial services, data and analytics to the pharmaceutical industry. We serve mostly small businesses, healthcare providers. So think your local pharmacy, hospital, and today we even serve a few governments as well. We've served over 12,000 customers over the past 3 years, and we still have a very long way to go. Happy to be here and look forward to the conversation.
Interesting. You agree with me that we have innovative experts on this panel, and then I'll begin with the conversation by exploring how collaboration between fintechs and traditional banking is driving financial innovation. So I'll start off with Maxwell, right? Maxwell, tell us, in what ways can partnership between fintech companies and traditional banks enhance infrastructure and also promote financial innovation across Africa?
Thanks, Tony. So that's an interesting question. It reminds me that a couple of years ago, we always think that fintech was going to kill the banks, that fintechs would build solutions that is hyper-verticalized and probably render banks irrelevant. But when you talk about partnerships, I would say banks are the backbone of financial technology companies, right? They are here to stay. You can't truly innovate or build depth in financial services without a banking partner of sorts, right? Even when you try to innovate outside of traditional money systems, like what we see with crypto and stable coins, somehow you still need a banking relationship, right? If you think about the entire value chain of a crypto transaction, say you want to on-ramp on chain and off-ramp, you need fiat, right? And the person holding that fiat is a bank, right? So partnerships between fintechs and banks, it's something that is really critical. And it's something that will promote financial services at scale, because these fintechs, when they build on top banks, they can move faster, right? when you are building a financial services product, you might want to say, oh, let's move fast and break things. Let's just launch and figure out regulation later on, figure out compliance. That's one strategy, but maybe you might not be able to sleep well at night. You don't know when the regulators will come for you. So maybe you want to foster a relationship with a bank. You want to partner with them to give you regulatory coverage. And then by doing so, you're growing fast, you have peace of mind, and you're stress testing the bank system that in a way that can build resilience overall, right? So when you ask like in what ways can this sort of partnerships drive or promote financial services, I would say by providing regulatory coverage for startups so that they have that backdrop to safely experiment and launch quickly. Also, and let me relate this in the context of cross-border payments, because at Waza, we help businesses pay money globally, right? There is absolutely no way we can do this without some form of global banking relationship. We need settlement accounts, we need banks that can pay money to China, to India, to the UK. And in the past, you might have seen the news where Mercury shut down some startups, right, that were using them to, that had emerging market founders. And so at Waza, we began to realize, and we were affected by that, by the way. So we built a lot of banking relationships to ensure that we're able to stay in business. And I think it's really essential. And that's one way to drive financial services through banking partnerships. So strong settlement accounts, true banking relationships, regulatory coverage, and somewhat financing are different ways partnerships between fintechs and banks can help promote financial services and build resilience in the infrastructure.
Interesting. Thank you so much for that elaborate response. I'll be moving on to Ted, right? I'm aware that Turaco is going full stack. And what is driving this innovation?
Yeah, it's a great question. So we're now a full stack insurance company, an underwriter in Kenya, Uganda, soon to be in Nigeria and Ghana as well. It's really related to the same topic you guys were just talking about, right? I think partnership is like a little bit of our journey. Partnership is where we started. So we were not an insurance company to start. We were a broker. We were a technology provider to insurance companies. 5 years in, I became increasingly convinced that you're not going to get a venture return for anyone being a broker. You need to own one side of the equation. You need to either fully own the customer or you need to fully own the product. So we went fully owning the product. So we still have partnerships as a part of what we do, but it's for distribution of our products that we now own ourselves. I really struggle with having a brokerage mindset for long term and actually turning that into a profitable model that can scale, that can kind of get the returns that our investors are after. So yeah, we made that change. We're right on the edge of profitability, and kind of the sky's the limit from here. So it's very interesting. And the people that we were partnering with, right, the insurance companies that are massive at scale across our markets, focused on the rich, right, focused on the top 5% of the market, they still want to work with us. Everyone was worried, okay, when you become an insurance company, well, the insurers just write you off and consider you a competitor and never want to work with you. If we have premiums, everyone wants those premiums. So it's been really interesting to see that evolution of our model in the last 2 years and how we're able to continue to expand off the back of those partnerships, but doing so in a way that just brings a lot more value to our company instead of giving the value to people that are not doing anything for it.
Interesting. I'll move a little bit from financial services and looking into artificial intelligence, emerging technologies. My question will be to Mumbi, right? How can emerging technologies such as machine learning, blockchain, artificial intelligence develop a scalable solutions for financial inclusion now? How does that help?
Awesome, thank you. I'm always very careful about talking about ML, AI, crypto, blockchain. They can be buzzwords. And at the end of the day, for me, it's how are we actually driving financial inclusion, leveraging technology, because technology is just a platform at the end of the day. So before I even talk about the specific technologies, I like to think of, for example, the early 2010s being where a lot of fintech innovation is happening. And the first phase of the industry was actually more focused on access. And if you start to look at some World Bank reports, you'll notice we've essentially doubled financial inclusion numbers or percentages in, let's call it a decade or a little over a decade. But now the more important question, and I think it's a question we've been asking ourselves a lot at Tala, is then what does the second phase actually become about? And when I think about the technologies, for me, it becomes about personalization. So how are you thinking about beyond access? How are you personalizing the financial services and experiences the customers are having? So enters the world of AI and blockchain and everything else, because just to give an example, at Tala, we, when we started in 2014, we were a market pioneer in how you can actually leverage alternative data to underwrite, and that was almost like the first, use cases of how machine learning could be used. Fast forward to today, then the power of LLMs and AI is in being able to develop and create new types of data. And just to give you a very rough example of things we've been playing around with, is you can imagine an MSME with stock or all the stuff within their business. Essentially, if you talk to any traditional bank, they don't understand how to actually underwrite or offer credit to that type of a small business, like a small grocery store. One, their data is not digitalized in any way. A lot of their transactions are still cash. But the power of AI is now it can actually start to pull in technology like OCR, really acting like a parser, and you can take a picture of someone's stock and essentially underwrite off of that. So I do think that these are the different ways we can take all the fancy names and the fancy technology and actually turn it into tools that actually support people and help people to build and create a livelihood. Another example of something we've been doing in LATAM is just thinking beyond the buzzy sides of crypto and blockchain, and actually building like a non-custodial wallet where we can leverage stablecoin lending. And it's been very powerful. It's something we've been testing in Peru, and we've seen amazing traction because this is very scalable technology, and we've made it very simple in terms of onboarding for consumers. So I think if you remember anything from what I said is, it's less about saying, hey, we use AI, we use ML, we're building on the blockchain. But at the end of the day, how is this, very high tech? How are these very high tech technologies actually being used by the everyday person to really help them in their lives? And I think that's the power of fintech.
Interesting. Thanks for sharing that in-depth insight, by the way, Mumbi. I'll be going to Samuel. I know you thrive in the health tech sector and then my question to you is, I'm aware that healthcare and health tech has grown significantly in the last 10 years. Can you share your insights into how seamless financial integration is enhancing financial viability in healthcare?
Thanks for that question. So if you think about it, right, the underlying layer of every business is financial services, right? So in healthcare or health tech, I would say it's as simple as, first of all, how do you collect money from customers or from patients? So something as simple as providing efficient payment services for patients to be able to pay for their healthcare. And it starts from as simple as one, for example, my brother Waza, who is helping businesses to move money across borders. How do we in Africa, where we're very import dependent as a continent, pay for medicines from India or from China? It's as simple as that. To maybe mobile money, for example, being used to sort of democratize access to financial services so that patients are able to go into their local pharmacy and pay very easily for the products that they need. It also goes even to the insurance industry. So if you think about insurance, when you're an insured patient, for example, and you've accessed service, your healthcare provider has to get payment back from the insurance business. How do they get that payment, and how do they get it efficiently? So even till today, that's a big sector to play in. In fact, if any startup wants to go to the US, for example, you're going to make a killing from that sort of industry, right? How do you help these providers get their payments on time. Today in Nigeria, for example, we have a big issue in the insurance industry where you go into a hospital, you need service, and the hospital has to check with the provider that they are going to get paid for that service, right? FinTech services can come in there and help provide that transparency so that that service is provided efficiently. Also, the reimbursement of claims. Hospitals today in Nigeria would deny you access to service because the hospital knows the insurance business would only pay them in 30 days, and it's a cash flow issue for them. So financial services or FinTech services can provide that bridge between getting paid by the insurance businesses and maybe giving some cash upfront to the healthcare providers before the reimbursement comes, right? So that's another sector. I would also touch on blockchain, as much as we hate using buzzwords. But today we're seeing blockchain and the impact in the pharmaceutical supply chain, especially in a place like Nigeria, where 40% of the products we sell are counterfeit, unfortunately. So 4 out of 10 packs of medicines, chances are those will be counterfeit. How do you ensure that products get to patients and they are authentic and genuine? We are beginning to see some FinTech services coming to play in that sector, providing some sort of blockchain service to the pharmaceutical companies. And also, back to the patients, is also how do they get access to, for example, financing to help them access the services that they need. Someone needs a surgery and is not insured. If you think about it, the insurance coverage in Africa is very, very low. In somewhere like Nigeria, we're dealing with sub 10%. That's how bad it is. So if someone has to, for example, pay 5 million naira for a surgery, how do they get access to that surgery? Do they just sit and wait, or do we lose that patient because they're not able to pay? We're beginning to also see some fintechs come into that area to play, where they're helping these patients with sort of access to capital to be able to access whatever service they need, and then get payback over time. So that's how fintech services can help sort of the growth of health tech, especially on this continent where we're still sort of backwards, especially when it comes to healthcare.
Thank you, Samuel. I can tell that you'll kick off the insurance conversation, and I'll be moving to Ted. And I know that Turaco is very big on insurance. In fact, if I must say that is your area of specialization, that's your niche. So let me ask you, Ted, how does Turaco make sure that makes it easy for uninsured person, right, to get cover? How do you do that at Turaco?
Yeah, it's a good question. So 95% of our customers have never had insurance before, right? We're the first product that the customers have had that has anything to do with risk mitigation. The way that we do that is through partnerships with banks and fintechs, right? So we work with Tala, we work with other banks and fintech providers across the markets that we operate. And the reason that we do that is twofold. One, customers trust their bank, right? Customers don't trust a random insurance company that's coming in, and even the big insurance companies have such a bad reputation now that customers don't trust them either, right? So we leverage the trust that Tala customers have with Tala and say, okay, this is the insurance product that Tala is providing in partnership with Turaco, and the customers say, okay, I'm much more likely to take this, right? So we see conversion rates within those partnerships, 20, 30, 40, 50% of people that we pitch to opt in for the insurance, which is really the magic of our model, is that the brand trust that banks and financial players have with their users is a reason for those users to trust that the insurance will actually work. Now we have to actually make the insurance work on the back end of that, otherwise we're going to get fired very quickly. But that's one side of it. The second side is getting paid, right? So there's no credit card that we can just bill every month for a subscription payment for insurance. If you ask someone any given day, do they want to pay for insurance today? They're going to say no, right? They're going to say, no, I have more pressing needs on my cash. I need to buy more food, or I need to repay a loan or something like this. So we have to make sure that the payment comes organically through channels that customers are already used to doing, used to experiencing. So we bundle the payment through loans or through other savings accounts or transactions that customers are used to doing, and that gets our retention, our payment rate much higher than a typical insurance company that's just selling directly to users on the continent.
Okay, great. Thanks for that. I'll be switching a bit to regulatory compliance, and I'm asking Mumbi a few questions regarding our insights around compliance, given the nature of your business, right? What strategy do you think fintechs can use to balance rapid innovation and also to ensure regulatory compliance, given the different jurisdictions, regulatory requirements across Africa, right? So how do you think we can use innovation to balance compliance and stay compliant even while we're chunking out this sort of lofty product into the market?
Yeah, for sure. And before I even speak on the specifics of regulation, if you think about any B2C fintech product, in my opinion, that's probably the most regulated, because every single customer, with every single customer, you actually have to think about consumer safety. You have to think about risks that are introduced. You have to think about the value, how you're communicating. And especially as we've started to expand a lot of our products beyond credit, then regulation has been a big, big learning for us. Just to, a joke we always give internally is we moved from 0 regulators to 4 regulators just in Kenya, and you can imagine how many markets we have. So it's been a big learning for us. And how I always think about regulators is, and this is not an oversimplification, but there are 2 types of regulators. The regulators who are innovative or are big champions of innovation, and the regulators who believe that their job is to crack the whip. And I've seen this being a big difference across, especially the different markets I engage with in Africa. But the core thing that connects those 2 types of regulators is education. At the end of the day, regulators fear what they don't understand. And if you spend a lot of time on the education side and actually passing on information on, hey, this is how the technology works, this is what we're trying to do, these are the risks we see, then you're actually able to work a lot closer with the regulator. But that said, I know we're talking about innovation, so I think of it as the short-term plan, long-term plan. I really like what you were talking about earlier on moving fast and breaking things. I do believe that gone are the days where you can do that, especially now with regulators being more aware. So I think of it as you have to think about your risk tolerance and create some type of a testing framework. So how can I actually move fast and test things before I invest too much in getting a license, to put it very simply? And I completely agree. This could be working with more traditional institutions who already have the licenses, working with fintechs who already have the licenses. It allows you to put a product in front of the customer before you can actually think, hey, maybe I need to get a PSP license or an MFI license and so on. But that said, I do think the other big lever, and this could be for more long-term gains, is collaboration. There is a lot we can learn from traditional institutions and how they actually form associations. Because I can promise you, if you walk through the door as a single fintech, you're less likely to get what you want versus a group of fintechs doing the same thing, pushing for specific policies. And I've seen this work really well in markets like Uganda with FITSPA. There's Tafina that just started in Tanzania. In Kenya, we're cleaning up because we had a very fragmented ecosystem. So we just founded the FinTech Alliance. It brings in all FinTech associations in Kenya. But I do think once you actually have that type of a body, you're able to push for the regulations that make sense, actually inform entire regulations. So far, there's no African market that has any neobank, like proper regulation. So at the point where this is being defined and we're not pulling in from policies that exist, are we at the table? I think that for me is the biggest push that I always have. And last thing I'll mention that could be a big win that comes out of this, I saw some very interesting news yesterday where Ghana and Rwanda are creating like a passport licensing project. So this essentially means if you're a PSP, you have a license in Ghana, if you want to move to Rwanda, it becomes a lot simpler for you. You just need to provide a few supplementary documents instead of seeking a whole other applying for a whole other license. And you can imagine how fast we'll make moves in terms of payments, in terms of financial services, in terms of insurance, etc., if we have such policies. But those things cannot happen if we're not at the table. So I think, just a challenge to all of us, and especially with how diverse of a room we are, like just creating these types of associations to make sure we have a seat at the table to inform these types of policies.
I can so resonate with your point, Mumbi, because, of course, compliance is my responsibility at Raenest. Maxwell, I know that Mumbi has shared a great in-depth around regulatory concerns and how we will fit into fintech and stay compliant and still do business. So let me know, share your thoughts around this, balance innovation in the same direction, right? And also stay compliant as a financial service provider in fintech especially.
Great. When you talk about balancing it, what I think about is actually trying to balance how fast you want to innovate and your risk appetite or your tolerance for risks, right? And we all know that regulation would always play catch up. So sometimes I'm tempted to ask, should we start thinking about balance first, right? Shouldn't we just innovate and let regulation catch up? Most of the innovation in I'll take Nigeria for example. Most of the innovation in the financial services landscape were already out there gathering momentum before there was some form of policy or framework around how it should operate. This whole pay with bank, for example, pay with bank accounts as a collection of payment method in Nigeria became, I think, Paystar kind of pioneered the technology. Before, if you wanted to pay for something, you're using your cards. Now you can just whip out your bank account and pay directly. And everybody, it like contributed a massive revenue to the company. They do huge volumes. It was so easy. Everybody wanted to do the same thing. And then central bank say, oh, whoa, let's take a step back and look at how the framework around, let's actually regulate this, right? So I think one thing I would advise in terms of balancing how fast you move and innovate with the regulators is to build with the regulators in mind. I don't necessarily think you need to start out, and talking about like really early stage fintech companies, I don't necessarily think you need to start out from a licensing perspective, but you need to build with what the regulators will probably look out for. So in the context of like payments that we kind of like play in, you want to build with anti-money laundering rules in mind. You want to do transaction monitoring. You want to have really strict and stringent KYB. And so I think I was talking to a company recently, probably Luno, who didn't have a license in South Africa, but they had built their entire infrastructure with the US regulation in mind, such that when the South African regulation around crypto came about, when they looked and did due diligence, the infrastructure was like, they were like, oh, whoa, this is so good. And it was easy for them to get the license in South Africa because they built with regulators in mind. So one way to approach this balance is to build with the regulators in mind. And we did the same thing at Waza, by the way, right? When we started, it was very easy to get an MSB license in the US, so we did that first. But then we looked across other jurisdictions we want to play, and I said, it might be too expensive. You need $2 million capitalization to get an IMTO license in Nigeria. You need the X amount. We don't have that money. We're a startup. But we had to build things in place. And later on, 6 months down the line, 8 months, we were now mature that we know that the risks portfolio that is becoming too much, that we need to go for a license, right? And then we went to Central Bank, and we are now licensed in Nigeria. We're licensed in Europe as well, Lithuania, and then in Mauritius. So that's one way I think about balancing this.
Great stuff. Ted, do you have any contributions towards this discussion now?
We love our regulators. I mean, the only thing is that I'll add to this is at every regulator, there's a front door, a side door, and a back door. Choose the front door. The other doors will get you in a lot of mess. I've seen that happen to plenty of friends' companies. So just choose the front door every time.
I get it. Okay, just would you say, and this question is to Mumbi, right? Would you say our regulators are more reactive than proactive in terms of the regulations?
I was laughing because as he was speaking, the first thing I thought was, I have a rule in my mind. Regulation comes at least 7 to 10 years after an industry has existed in Africa. So I would say reactive, but it's not by design. I don't think it's actually what they prefer. In some instances, it is, and I'll talk about that. But it's because they don't understand it. And as a result, for example, if you talk to any regulator, let me give Kenya as an example with the regulators I've spent time with. The first time they had the word crypto, they were hearing complaints from customers about fraud. So if you don't understand what this is, your first reaction is shut everything down. We need to protect the consumer. But when, for example, I remember in my previous life, when we sat with these committees and explained it to them, the attitude changes because it becomes more about, okay, then these are my concerns around consumer protection. How do we work around this? And it flips the conversation. The other thing I'll mention on the reactive point, I do also think for technologies that are not, they don't have a big risk to consumer protection, there are regulators who literally take a very intentional seat and just watch it play out and see what will happen. Because you can't also create regulation if there are no precedences. So let's use AI as an example. If you try and regulate AI in Africa, it doesn't make sense. So at this point. So you might as well sit back and watch how it's used and then figure out, okay, this is how we need to regulate. So yeah, but long story short, yes, reactive is the way we move in Africa.
Great.
I want to quickly add to that. Sorry, I think we also need stakeholder management across the table, both from the players and the regulators. Regulators need to be more open to have these conversations. Regulators think they know it, and they don't know that. Like, they think they know it all sometimes, and they need to be more open to learn. And on the other side, financial services company and other businesses should be proactive in educate, especially when you're playing in a nascent field, and in I would say, an unregulated space. So when crypto came about, right, it was still within financial services, but there was no framework of how to regulate it. And then the regulators played catch up to that. And it took a lot of big players to come together. They formed this alliance, and they kept engaging the regulators and said, "This is how it works. This is how it works," right? And eventually, there was businesses we want to be regulated. A lot of businesses want to be regulated. It's just we need more clarity, and for you to get that clarity, you need to engage both the regulators and educate them. And I think that's really important.
I just wanted to say, but also sometimes you can enjoy the lack of clarity a bit. It allows you to innovate faster.
To make
as
a
an
big statement.
example, like I think for the first 7 years of Tala's existence, especially in Kenya, there were no regulations, but it allowed us to move really fast and innovate, provided you know you're doing things the right way. I like your point on building the regulator in mind, so that when regulation comes in, you don't have barriers, but at the same time, just allows you to move faster, in all honesty. Yeah.
Interesting. I want to, from our conversation, I can tell that it's been very, very engaging. Moving from financial services, innovation, now to regulatory compliance. And I can tell that our panel has done justice to the topic. They've shared their insights about how innovation is driving fintech in Africa. And also, they share their insights around insurance and what to expect from Turaco as they move into full stack. Samuel has shared his insight also in the area of healthcare and how financial services is driving healthcare across Africa. Mumbi is also doing a fantastic job in Tala and in terms of credits, extending credit facilities to the jurisdictions that they have business presence. Same with Maxwell. Maxwell started on a very high note. He brought in innovation, brought in regulatory compliance, and everything in between. So it's been an interesting session for me, and I hope that the audience also enjoyed the great insight from my panelists. And I want to thank you for making it with me today, and also for the audience for listening. And I hope that you've taken one or 2 points from the conversation, and we look forward to shaping fintech landscape together as innovators and also tech experts in Africa. Thank you so much, audience, and thank you to my panelists, and God bless you. Yeah.
Thank you, Toyin.